dentists are still there, they are trading one lots, which is a meaningless position when the fund managers are trading 1,000 at a clip. Now you almost have to be contrary. You have to ask, isn't it true that all my fellow professional traders are already in, so who is left to buy? You didn't have to worry about that before, because there was always somebody left to buy, the people who were getting the information or reacting slower. Now, everybody is just as decisive, just as fast.
Are the markets more prone to false breakouts now?
Yes, much more.
Are trend-following systems then doomed to mediocrity?
I believe so. I believe that the era of trend following is over until and unless there is a particular imbalance in a market that overrides everything else. Another exception would be if we were to enter a major inflationary or deflationary environment.
In other words, unless there is some very powerful force that can overwhelm everything else.
Yes.
Have the markets changed during the past 5 to 10 years because professional money managers now account for a much greater proportion of speculative trading activity, as opposed to the small speculators who tend to make all the mistakes?
The markets have changed. The proof is that Richard Dennis, who has done well for many years, lost over 50% on the funds he was managing in 1988. The trend-following systems approach doesn't work anymore. The problem is that once you have defined a trend and taken a position, everyone else has taken a position as well. Since there is no one left to buy, the market swings around in the other direction and gets you out. One reason we don't have many good trends anymore is that the central banks are preventing currency moves from getting out of hand by taking the other side of the trend.
Haven't they always done that?
I don't think so. If you look at a chart of treasury debt held by foreign central banks, you will see that it has risen astronomically during the last few years. The foreign banks seem to be taking over from private foreign investors in financing our trade debts.
What do you think that means in terms of trading? And has your own trading style changed because of it?
At one time, I traded heavily in currencies. For example, in the years after Reagan was first elected and the dollar was very strong, I would take positions as large as 600 million Deutschmarks between my own account and the company account. At the time, that was about $300 million worth. That was a pretty good line. I was probably one of the bigger currency traders in the world, including the banks. It was very exhausting because it was a 24-hour market. When I went to sleep, I would have to wake up almost every 2 hours to check the markets. I would tune in every major center as it opened: Australia, Hong Kong, Zurich, and London. It killed my marriage. Nowadays, I try to avoid the currencies, because I feel it is a totally political situation. You have to determine what the central banks are going to do.
When you were trading the currencies actively, were you getting up through the night because you were worried about getting caught on the wrong side of a major move before the markets opened in the US?
Yes.
Did you always trade that way? Or did you get caught enough times so that you started 22 trading around the clock?
It happened enough times to make me leery.
There would be a big gap move that you could have avoided by trading overseas.
That is right. For example, I remember one time, during late 1978, the dollar was getting battered, falling to new lows every day. This was during a period when I was cooperating and trading as a colleague with Brace Kovner. We used to talk hours every day. One day, we noticed that the dollar got mysteriously strong. There was an intense price movement that couldn't be explained by any known information. We just bailed out of our long currency positions like crazy. That weekend, President Carter announced a dollar supo. If we had waited until the next U.S. trading session, we would have been annihilated. That illustrates one of the principles we believed in, namely, that the big players, including the governments, would always tip their hand. If we saw a surprise price move against us that we didn't understand, we often got out and looked for the reason later.
I remember that market well. The currency futures markets were locked limit down for several days in a row after that announcement. You must have gotten out right near the top of that market.
We made a great exit on that trade. Anyway, my point is that I believe, as a courtesy, the European central banks are notified about major changes we are going to make, and they often act ahead of U.S. policy announcements. Consequently, the price move shows up in Europe first, even if it is because of something we initiate. If it's an action initiated by the Europeans, the price move is certainly going to occur there first. I think the best hours to trade are often in Europe. If I had a period in which I was going to devote my life to trading, I would want to live in Europe.
Let's go back and fill in some of your trading history. Where did you go after you decided to give up on being a floor trader?
I got a call from Amos Hostetter, who had befriended me at Shearson. At the time, he was also trading some money for Commodities Corporation. Amos told me that I would be well advised to consider joining Commodities Corporation as a trader. At the time, their theory was that they were going to hire all these great econometricians to be traders. They had people like Paul Samuelson on the board. They brought up the idea of hiring me at a meeting. The first question was, what articles has he written? In what journals has he been published? I had a B.A. in liberal arts, and that was it. The punchline was, he just trades. Everybody thought that was very funny.
But weren't they in business to make money trading?
They didn't think it was possible to really make money unless you had a Ph.D. But Amos convinced them to give me a chance. I believe I was the first non-Ph.D. trader they had ever hired. They started me out with $30,000 in August 1974. After about 10 years, I had turned that account into $80 million.
Did you multiply the original $30,000 into $80 million, or did they add money along the way?
After the first few years, they gave me another $100,000 to trade. After that time, they were always taking money out. In those years, they were in an expansionary phase, and they taxed the traders 30% a year to pay for their expenses. So you had to make 30% a year to keep your account level. You must have had some incredible return years. Given the growth of your account, particularly under that handicap, I was making at least 100% a year for years and years.
What was your best year?
My best year must have been 1979. It was an incredible year. I caught gold when it went up to over $800.
You caught the whole move.
I was in and out, but I remember catching big chunks of it, $100 per ounce at a time. It was a wild time. In those days, I would buy gold in Australia, Hong Kong would push it up $10 higher, at 23 would go up another $10 in London, and by the time New York opened, I was able to sell out at a $30 profit.
It sounds like there was an enormous advantage to buying gold in the overseas markets rather than in the United States.
In those days, I had an advantage by being in California, because I was up trading in Hong Kong when my New York colleagues were asleep. I remember when I heard about the invasion of Afghanistan on the television news. I called Hong Kong to see if anybody knew about it, and nobody seemed to. The price wasn't changing. I was able to buy 200,000 ounces of gold before anybody knew what was happening. That's 2,000 contracts.
Did you have any liquidity problems with their taking on that size position in Hong Kong?
No, they gave me the stuff, but of course, they got fried by doing it. I was told on my last visit to Hong Kong that I shouldn't visit the gold floor. Some of the people still remember that episode.
They knew who was on the other side of the trade.
Yes, they knew.
Did they think that you knew something?
No, they probably thought I was just crazy, coming in and buying all that gold. Then, when the news broke about 5 to 10 minutes later, everybody started scrambling. I had an immediate $10 per ounce profit on 200,000 ounces.
It's hard to believe you could trade if the television news.
I know. I had never done it before. That was the first, last, and only time, but I did do it.
That particular gold market ended in a near vertical rise and fall. Did you get out in time?
Yes, I got out around $750 on the way up. I felt sick when I saw gold go up to nearly $900. But later, when it was back down to $400, one felt much better about it.
All in all, you got out very well. What tipped you off that we were near top?
At that time, we had many wild markets. One of my rails was to get out when the volatility and momentum became absolutely insane. One way I had of measuring that was with limit days. In those days, we used to have a lot of situations when a market would go limit up for a number of consecutive days. On the third straight limit up day, I would begin to be very, very cautious. I would almost always get out on the fourth limit up day. And if I had somehow survived with any part of my position that long, I had a mandatory rail to get out on the fifth limit up day. I just forced myself out of the market on that kind of volatility.
Your transition from being a losing trader to being very successful coincided with the big bull phase in the commodity markets during the early to mid 1970s. How much of your early success was due to your skills as a trader, and how much was just the markets?
Honestly, I think the markets were so good that by buying and holding you just couldn't lose. There were a lot of other success stories. Fortunes were being made.
But a lot of those people didn't keep their fortunes.
That's true. But I was very fortunate. By the time the markets got difficult again, I was a good trader. By then, I had really learned my craft. Also, by that time, I had the advantage of having become very knowledgeable in one market, cocoa. For almost 2 years, I traded almost nothing but cocoa. Because of the information and help I got from Helmut Weimar, the founder of Commodities Corporation. Helmut was an incredible expert on cocoa. He wrote a book that was so deep I couldn't understand the cover. Also, he had all kinds of friends in the business. With the knowledge and information I got from Helmut and his friends, I felt that I knew the universe of cocoa in a way that I had never known any market before.
That phase of almost exclusive cocoa trading obviously came to an end. What happened?
Helmut retired from cocoa trading.
I assume Helmut was not nearly as successful a trader as you were.
Let's just say that I traded much better on Helmut's information than he did.
Excluding the early losing years, were there any trades that stand out as being particularly traumatic?
Well, I would never let myself get caught up in potentially intimidating disasters. The worst situation occurred during my heavy currency trading period. I was doing well and could afford to hold large positions. One time, I had a really large position in Deutschmarks when the Bundesbank came in and decided to punish the speculators. I called in just around the time that all this was happening and found out that I was out $2,000 million in about 5 minutes, so I got out rather than see the $2,000 million loss go to $10 million. Then I had to endure the disturbing experience of watching the market recover its entire fall.
How long after you got out?
About half an hour.
Did you go back in?
No, they had taken the starch out of me by that point.
In retrospect, do you feel you did the right thing by getting out of that trade?
Yes, but it still hurt to realize that if I had sat it out and done nothing, I would have been okay instead of losing $2 million.
Did you invest any of the money you were making in your trading, or did you keep plowing it back into your own account?
I made a number of bad investments and lost a fairly large chunk of the money I had made trading. When I was trading big, I wanted to have a reason to keep doing it, so I just spent money wildly. At one time, I owned about 10 houses and ended up losing money on all of them. Some I sold before I had even spent a single night in them. I had a plane charter service and lost a lot of money on that. At one point, I figured out that for every dollar I made trading, 30% was going to the government, 30% was going to support my planes, and 20% was going to support my real estate. So I finally decided to sell everything.
It sounds like as wise as you were as a trader, you were naive as an investor.
Yes, I was incredibly naive. Out of a fairly large number of real estate transactions, many in California, I lost money on all but one of them. I am probably the only person alive that can claim that dubious distinction.
Why do you think you did so poorly on your investments?
I would do everything emotionally. I didn't analyze anything.
In a sense, you were repeating the mistake of your early trading experience, getting involved in something you knew nothing about and then losing money. Didn't any bells go off? It almost sounds like you had a self-destructive instinct in losing your money elsewhere.
Yes, absolutely. I probably lost more than half the money I made.
During this period when you were doing all these unwise things, didn't anybody try to grab you by the shoulders and say, "Do you realize what you're doing?"
Yes, but any time someone on my staff did, I would fire them. At one time, I was employing 60 or 70 people. In addition to all my money-losing businesses, I had a huge nut to make to just support the payroll. Frankly, a lot of the money I made just went down the drain.
Did these losses have any of the emotional impact of losses in the market? The reason I ask is that you seem to talk about these investment losses very dispassionately.
Yes, it hurt to realize what a fool I had been, but I have learned not to be as attached to material things. I accepted it as a life lesson. I learned I don't have to own a house in every beautiful place in the world. I can stay at a hotel and walk on the beach or climb a trail there. Or, if I really feel like spoiling myself, I can charter a plane. I don't have to own one.
Right. That certainly makes sense. But what I am getting at is that I suspect that if you had lost the same amount of money trading, it would have been a much more traumatic 25 experience. Is that because your ego wasn't attached to these other ventures?
Yes, I'm sure that's true. I always felt that, at least, I was smart at one thing. I feel like trading is the only thing I am really good at. If not for that, I probably would have wound up shining shoes.
Do you think being a great trader is an innate skill?
I think to be in the upper echelon of successful traders requires an innate skill, a gift. It's just like being a great violinist. But to be a competent trader and make money is a skill you can learn.
Having been through the whole trading experience from failure to extreme success, what basic advice could you give a beginning trader or a losing trader?
The first thing I would say is always bet less than 5% of your money on any one idea. That way you can be wrong more than 20 times. It will take you a long time to lose your money. I would emphasize that the 5% applies to one idea. If you take a long position into different related grain markets, that is still one idea.